Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Jeff Canin of E8 Angels and the LM8 Venture Fund. Jeff, thank you for joining us.
Yeah, Hall, thank you for thinking of us.
Great. So what was your background before you started investing in clean tech companies?
Well, depending on how far back we would go, I have an engineering undergrad degree, specifically in material science, and an MBA. My first work out of graduate school was 5 years in large systems marketing with IBM, and then I spent about 11 years as a sell-side tech equity analyst in San Francisco with Hambrecht & Quist and Solomon Brothers. Decided to give a shot at being on the buy side, and in 95 I joined a large California venture capital firm, but never down there. I was brought up to Bellevue, Washington. But sadly, after a couple of years, they, as well as virtually every other California VC that had Northwest offices, closed theirs. But we liked it here and stayed. And for the past 10 years, I've worked both independently, advising startups, including quite a few university spinouts, and then with E8 Angels, both as a board member of the Angel Group and co-manager of our small clean tech venture fund.
So what led you to start investing in the clean tech sector? What about the clean tech got you excited about it?
Well, as I mentioned, my prior financial work was not in this sector, but rather broadly in information technology. But part of my refocus was based on a desire to match my investments, or at least part of the portfolio, on companies addressing some of the critical worldwide problems I saw, including dealing with climate change, water scarcity, food scarcity. And also I became involved around 2000 with a number of tech commercialization work initiatives at University of Washington and Oregon State University. And many of those were early stage companies in material science and clean tech. But I think the most active engagement has been the last 4 or 5 years when I became a board member of E8 Angels. And for those who may not know, E8 Angels was originally founded as Northwest Energy Angels, and it remains today the largest and most active angel group investing strictly in clean tech.
Right. So for those investors who want to start investing in clean tech, what would you advise them at this stage?
Well, be cautious. I mean, I think a lot of the advice I'd give for investing in clean tech would be the same as in any other sector. And I guess that would include diversifying your investments, and not just over subsectors and stages, but also over the economic cycle. And I think it's critically important to do due diligence, which suggests ideally to invest in areas that you have some familiarity with. And if you don't, or just interested in the area, I think the better channel is to work with angel groups that have a similar focus. I think if you look at the specific companies, leadership is really critical. So we always pay attention to the executive team, even if it's not complete at the outset. And since clean tech is relatively new, often you don't see second-time entrepreneurs, but if they've had success in other sectors, that would be perhaps sufficient. I also think in the clean tech space, especially these days, we really look for some truly unique and long-term differentiation in what they're offering, or some other unfair advantage in terms of access to markets or customers. I'd also point out that much of what we invest in is quite early stage. It may be pre-revenue. It may not even be at the point that they've got fully commercializable products. So we do look for some, and would advise investors to do so, look for some market validation, and that might take the form of pilot installations or letters of intent from potential customers. We also see validation in the form of non-dilutive grants, federal agencies such as the National Science Foundation or the Department of Energy. And I'd point out that getting those grants, it's not just the benefit of the non-dilutive financing, but also the fact that those are highly competitive, and it indicates recognition that what they're doing is both viable and unique. I would say one primary difference between investing in clean tech and sustainability is the length of time. It really requires patient capital because you're not going to see some viral overnight success as you might in a new mobile game. And so we really look for patient investors and ones willing to experience the potential dilution of additional capital.
So how is the clean tech industry evolving? What are the changes that you see out there today?
There are some good and some not so good. I think on the positive side, there's increasing concern held by a number of investors, institutions towards taking action in dealing with some of these world life-threatening challenges, which, as I mentioned, include climate change and water scarcity, and recognition that new technologies are going to be clearly part of the solution. I think what is positive is that even though we're seeing, to say the least, some disengagement by the U.S. federal government, we're seeing increasing attention by state-level policymakers, other countries attentive to these issues, and also funders, including foundations, family offices with environmental mission orientation. I think if you look at some of the other positive trends, particularly in renewable energy, notably wind and solar, the costs have come down so dramatically over the past years that even though we're also seeing, at least at present, lower fossil fuel costs for petroleum and natural gas, it's more than compensating for that. So I think it's becoming increasingly cost effective to pursue renewable energy. And I think in other areas such as storage technology, energy storage, we're also going to be seeing similar sharp reductions in cost. I would point out, as far as the industry evolving, there are definitely sectors that once had past periods of enthusiasm, such as biofuels and fuel cells, but they've had disappointments and funding has dried up to some degree in the space. But there's other areas that mentioned storage that have picked up dramatically. There are many, compared to when I first started in this sector, there's fewer VCs, venture firms focused on clean tech, and the funding totals have dropped quite a bit. But I think we're seeing, to some degree, compensating for that, a pickup in corporate financial backers. And they also have a double bottom line. And in our case, our double bottom line is environmental improvement and profits. In the case of the corporate investors, it's financial returns, but also how it fits with their own strategic business.
Well, in some deals, the amount of data you collect or the stickiness of the app or some other factor is the impact on returns. But in clean tech, what do you find is the biggest impact on returns that makes for a really great investment versus just an average one?
Well, to state one obvious thing, reasonable terms on our initial investment, but also because these are very long-term investments compared to some of the other sectors that require a lot of capital, it is in fact the future dilution that would be required. And key to that is we never expect, because we tend to be early investors, meaning we're more often than not involved either solely or as part of a syndicate in the first external funding round. So we want to make sure with our relatively small commitment and knowing that there's going to be substantial follow-on funding, that whatever round we are investing in will clearly get them to some valuation enhancing milestones. But the obvious other impacts on return is just really picking areas to invest in that have differentiation or are likely to experience strong growth in their market and the ability to generate a reasonable ownership stake in those sectors.
So for your fund, what is the investment thesis? Another way to say it is, what exactly do you guys look for in companies that are in this space? Do they have to have revenue? Do they have to have proof of concept? Or do they have to have customers? What point do you guys engage?
Sure. And I should say we don't have an elevator pitch thesis per se. And part of that is because clean tech is very broad, and we have roughly 65 members in our angel group, each of whom have somewhat different orientation towards the sectors they're interested, the stage, and how much funding they can participate in. But I would say, in general, we're interested in anything that can contribute to a reduction of environmental impact. And this, again, is very broad. But in every case, while we don't have specific metrics on environmental impact, it's critical that they have that in mind. As far as stage, as I mentioned, we tend to be in on the first financing externally, excluding kind of the seed funding by the entrepreneurs themselves or federal grants. And I would say half of our investments are in the form of a convertible note, and the other half are in the form of either a Series C or a Series A priced round. But because, again, of the subsequent dilution we're likely to see, we really pay close attention to the reasonableness of the financial projections and that we can be confident that they have a sustainable long-term advantage. And I'd also point out, and again, this wouldn't be unique to clean tech, that we make sure that the portfolio company management team from the very outset has an eye on what the exit eventually will be. We're not interested in lifestyle companies, and we really want to have we're not focused specifically on the time frame. We do pay close attention to the feasibility of finding an exit through an acquisition.
So do you have a couple of examples of startups that fit that thesis that you have funded?
Yeah, we just to give you a frame of reference, we've been around since over 13 years. And I think in the aggregate, our angel members and our fund has invested in over $35 million in 70 transactions. And it's really all across the map. But just some examples of sectors of the types of companies that we've invested in recently that we're pretty enthusiastic about. One is a company that has a very compelling cloud-based real-time wastewater monitoring system that they've been very successful in promoting to big box retailers like Costco and to hotels. Another one, a completely different sector, is a Northwest company that's cultivating and marketing mealworms as a very nutritious and economically attractive feedstock for aquaculture. Another one that's more in the material science area is a spin-out from UW that's developing flexible ceramic membranes that can be used for flow batteries, water purification, and a number of other quite interesting markets. And, just one other to point out is a local aggregator of renewable energy suppliers and users for creating a market for power purchase agreements. Those are examples, but as I mentioned, our angel group is so diverse that anything that falls in the clean tech area would likely find interest within our group. And I should point out, even though our members are 95% of our members are in the Seattle area, we are able to invest anywhere in North America, anywhere in the US and Canada.
Well, that's great. So it seems like clean tech has a lot of challenges. There's the regulatory, there's the technical, and then there's the market. But what do you think is the main challenge that clean tech has to overcome in this space?
I would say first and foremost is the relative limited amount of funding that's currently pursuing this sector. Hopefully that cycle will turn around, because at one point, by one report, 17% of venture investment was in the loosely defined clean tech space. And I think that's, for the last 3 years, has been in the low single-digit percentages. So I think that is the biggest constraint, availability of capital. And that in combination is that there had been some very visible large disappointments and failures, which I think colored investor attitude. But I think that also will change. Also, compared to some other areas, perhaps there's much more technology risk, especially if you're coming in early stage on moving from, for example, a university spin out that's still in the prototype stage to completing a commercial version. And as I think you pointed out, in some spaces, particularly on utility scale, renewable energy or energy efficiency, there is significant dependency on government subsidies or mandates. And that's a very risky strategy unless you can be fairly confident that in short order, the cost for developing and implementing those technologies will lower themselves sufficiently to be economically justifiable on their own merits.
So if you had to pick out a few subsectors or applications, maybe 2 or 3, which ones do you think are the best opportunities today to pursue inside the clean tech space?
And to be candid, these are largely my own. Others in our group may have a different view, and I might have a different view a couple of years from now. But at present, some that I'd point out as particularly interesting are cost-effective electric energy storage technologies. That would include primarily batteries and battery components, but there's some other interesting developments for storing and buffering energy. Another one is water treatment processes and companies that are facilitating efficient use of water. So I think that's a somewhat underinvested area compared to energy and energy efficiency. I'd say another area would be companies that are producing useful products and materials from waste resources, where they ideally can get paid on both sides for accepting the waste products and then for revenue derived from the end products, the materials they produce. I guess one last area would, and this is a very broad category, but smart city and smart building software products and services.
Well, that's great. That's a good list. So in the last few minutes that we have, what else should we cover that we haven't?
Well, only, and just to put in a promotion, not so much for our group, but just for the area, that I would very much encourage investors to look at the clean tech sector. And I don't think you merely have to be a contrarian investor to do that. I think there's some extremely interesting subsectors. And we also would very much encourage folks who are interested to look at our group, Angels. We're a nonprofit. We don't charge our companies anything to apply or to present. And while we do have our meetings in Seattle, those who are interested from other geographies can join by WebEx or webinar. And certainly if they're ever in Seattle, we welcome them to come as a guest.
Well, that's great. So how best for listeners to get back in touch with you?
Well, two things. Our website is pretty up to date for our portfolio companies and what we do. And if there's entrepreneurs who are listening to this, we would encourage them to consider submitting an application. And that's at www.e8, that's E, the number 8, angels.com, or just contact me directly on my LinkedIn, which is just Jeff Canin, JEFFCANIN.
Well, great. We'll put those in the show notes and people can get back in touch with you. Appreciate your taking time to join us today and hope to have you back for a follow-up soon.
Great. Thanks, Hall. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.